Greetings. Dr. Scott here at your service. I'd like to do a deeper dive into something called Edgar. The SEC, the Securities and Exchange Commission, publishes all 10K data, which is the annual report, all 10Q data, which is the quarterly report, and all kinds of other information for all publicly traded companies in the United States. You won't find Honda, you won't find Toyota, but you'll find Nike, you'll find Under Armour, you'll find Microsoft, you'll find Nvidia, and we're going to find Walmart. We're going to play with that. And I want to walk you through this so you understand how to use Edgar and make sense of the financial statements and some of the reporting capabilities that are built in. So I'm going to start by sharing my screen, and we're going to go into the, well, let's go over to ChatGPT, and we're going to ask it about Edgar. Tell me about the spell right, the SEC's Edgar. And let's see what it comes up with. I use a thinking model, and it does give you a little bit pretty good details as it goes through. So it's exploring, it's going to grind through some things. And I'll search for pages. Thank you very much. The thinking model is almost like the reasoning models that give you through. So here it is: public filing system, electronic data gathering, analysis, and retrieval, used to collect, validate, index, accept, and publish disclosures. So when all filings are made, almost instantly they appear in Edgar, pretty short order. As I say, the 10K, the 10Q, annual and quarterly reports, 8K, a current report, registration statements, Def 14A, proxies, a bunch of forms. And this just gives you some background information, and you can do a deeper dive yourself. You've got free access to Gemini, free access to ChatGPT. Have a good time. It's pretty powerful for research. For us, it's going to be pretty powerful for financial statement analysis. So let's go through and walk through what it takes to get into Edgar. So I'm going to do a search right here. You can use Chrome, Firefox. I'm going to search for Edgar, and there it is. It comes up right away. And it does come up with some other Edgars down here, but I want to get Edgar, search for filings. And the question I want to answer, I'm going to jump over it and give you a question to answer. And I'm going to ask that you please put a piece of paper or on a piece of paper, write down your answer. Keep yourself honest. I'm a fan of good and plenty. And when I go in and I want to go at and say, you know what, how much does Walmart keep on a dollar box of good and plenty? Well, good and plenty is more expensive now, so I'm going to say a dollar orange they sell. Are they going to keep 50 cents? And amount they put in their pocket when all is said and done. Is it 25 to 50 cents? C, 10 to 25 cents? 6 to 10 cents? E, 3 to 6 cents? Or F, less than 3 cents? Just write an A, B, C, D, or F on the side. Again, keep yourself honest. I might ask you later on what you answered at a survey, but I want to give you an idea of how we can use Edgar and looking at the income statement to do that analysis. So let me go back to my Firefox and go in, and we're going to do a search filings. I type in Walmart here, and you're going to see Walmart there. And you'll also notice in the upper right-hand corner, there's something called classic version. If you get this screen, sometimes there's some variations. Sometimes you go directly to Walmart. Sometimes you go to the form itself. I'm going to go to the classic version, upper right-hand corner. And as I scroll down, we get a whole bunch of filing types: 8Ks, 5 S8s, certs, 2S. What did I say I wanted? The annual report? Let's type in 10K for the annual report. And I hit return, and I get nothing. Well, why is that? Because the syntax is kind of choosy. If you don't do a 10-K, there we go. We got a whole bunch of 10Ks now. So you need that dash in there. It's pretty important when you enter the filing type. So we've got the 10K document for the, I think I have a January 31 year end, ending 25, 24, 23, 22. I'm going to go to the latest one. And rather than go direct to the document, I will go to interactive data. Interactive data allows me to see the cover. There's a cover sheet, cover page. So I'll go down, document type. It's Bentonville, Arkansas, some background information, but that's not really what I want. Audit information. Let's see who the auditor is. Oh, EY, my alma mater. So Ernst& Young is the auditor, one of the big four CPA firms. That's good to see. But now I'm going to go to financial statements. And as you can see, there's a couple of options here. And if I asked you, which income statement do you think I want? Consolidated statement of income, consolidated statement of comprehensive income. And you might say, one of those, confirmed. And then some balance sheet options, shareholder equity, cash flow. Those are all good statements. Now, I will tell you, most of my students will say, oh, comprehensive income. That looks like the logical choice. And what's on an income statement? We have revenue, expenses, net income. Okay, that I remember that. Well, there is my consolidated statement of comprehensive income. First of all, it starts with net income. That's not the income statement I'm thinking of. Net income attributable not controlling, currency translation and other. Okay, cash flow hedges, other comprehensive income, OCI, other comprehensive income, less other now. Well, this does not look like the income statement I really want. Sometimes, by the way, you'll see a statement of operations, sometimes a statement of income, sometimes a profit and loss statement. We got a bunch of names. But the bottom line is I want it to start with revenues. I want it to go down to sales, get total revenues, cost of goods sold or cost of sales, SG&A, selling general administrative, operating income, interest, a whole bunch of stuff, net income. This is the right one. And you'll notice there's an earnings per share here. So I go right above that number, and that's the number I want for my net income. And what we're actually looking for, I'm going to go in and I'm going to stop the share here and reshare because I have a little diagram of some calculations that we're talking about here. So let's stop the share, and I'm going to go to the whiteboard and we're in Zoom. So your whiteboard, okay, I have some explanations that I want you to see. And on this whiteboard, there's a couple of things to point out. So we're looking for the net income percentage. The calculation of that net income percentage will be the net income over net sales. That's all the sales and all the income. There are a couple of other variations here. Cost of goods sold, that's the cost of the products itself that are sold, not the SG&A or the other stuff. So we're going to calculate a cost of goods sold percentage. We're going to look at a gross profit percentage, which is your sales minus your cost of goods sold is your gross profit. And a couple of notes. I want to make sure that you don't get too confused if you see different terminology. It's very easy to say, oh, yes, there's a statement of operations and then a statement of comprehensive income. That's what some of them have. You look at comprehensive income and say, no, that's not what I really want. But the statement of operations happens to be the correct income statement. And the same thing for income, earnings per share, return on assets, return on equity. Earnings, return, net profit, net income are identical. They all mean the same things, which I guess is why the accountants get the big bucks, because we confuse you with multiple terms for the same thing. So be aware that sometimes it's the concept you want to understand. Net income's the bottom line, same as net profit, same as earnings, same as return. Those are all identical and can't be used in the formula. So earnings divided by number of shares, average number of shares. Return, which is net income divided by average assets. Return on equity is net income or return on net profit divided by average equity. And we'll talk more about those another time. Then there's the cost of goods sold, which is sometimes called cost of products sold, which is sometimes called cost of sales. All mean the same thing. I think on Exxon's income statement, they say cost of oil. And that's their products that they're selling. They have the oil, that's their material that they're putting into it. So you need to be aware of those different kind of things. So I'm going to bounce out of here, go back in and share my Edgar so that you can see what we're doing on full screen. And I'll clear that top, get the voting. Sometimes that blocks things out, hide floating meeting controls. Okay, so now I have an income statement. And you can see revenues, 3 years. By the way, the balance sheet is 2 years, the income statement is 3 years. But if we're looking at the income statement, notice the year end is January 31, 2025, January 31, 2024, and 2023. We're going to look for the most current year. And doing that, we're going to see net sales, membership income. Walmart has membership. Yeah, they have a online membership, but that's not the one they're talking about. You probably know that Walmart also owns Sam's Club. And so most of the Sam's Club revenue and the online revenue is attributable. I've asked you, what is the sales of Walmart? I would hope you wouldn't say $674,000 and 500, I'm sorry, $674,538. I know some houses that cost more than that. I know some cars that cost more than that. And if you look at that, it says up here in millions. So there's 6 zeros in a million. So I'd have to add 6 zeros to this number, and that would be 674,538,000,000, which is $674 billion, $538 million in net sales. But I really want total revenue. So, because I want to include my membership income. So if I look at that, I actually have $680 billion, $985 million. And I told you to go down to the earnings per share and look at the number above that. And the net income, it says consolidated net income attributed to Walmart. I'm not worried about non-controlling interest. Not 19,436, but 19,436,000,000 is the net income we want to worry about. I'm going to copy all these numbers into a spreadsheet just to make my life easier, because let's see if I can do that gracefully. I'm sure I can. Okay, so I'm going to take all these numbers, put them in a spreadsheet. Now, you can use a calculator if you'd rather, but I've got an Excel spreadsheet opened up, I think, right there. I'm going to put them here. I go ahead and expand my cells so I get the numbers in a reasonable place. And you can see here, I've got my revenues and my net sales, and then I've got total revenues. I have membership and other income, everything you see, and let's tighten that up a little bit. Go ahead and give that a little bit of closure here. So you can see most of the numbers together. So here's my net income, and here's my sales in one screen. So I'm going to calculate my net income divided by my net sales, or my total sales, equals a $19 billion number slash the $680 billion number, and hit enter. And this is a dollar. I don't really want a dollar. I want to make this let's make it a percentage. And I'm going to give it a little bit more. I'm going to give it 2 decimal places. Okay. So when I look at this column and I say, oh, I have 2.85% based on my 100% of total revenue. So that tells me that the proper answer to the original question of 2.85 cents is under 3 cents. So Walmart is keeping 2.85 cents for every dollar of sales. Now let's see what happens if we go in 2023. We're going to do the same thing. We're going to do equal sign. We're going to go down to the 11,680 and divide by the 611,289. And we come out and we do the same thing here. So let's go change that to a percentage and make it a little bit more readable and give it a little depth. And if you look here, you're going to see that we have 1.91%. So they were almost 2% 2 years ago. For every dollar, they kept 2 cents. And then the most current year, for every dollar, they keep about 3 cents. So that actually, there's an improvement. And the reason you use this is called vertical analysis or common size financial statements. Because if you look at Target, said, oh, well, Target's got a lot of sales. They may have $312 billion, but their net income is going to be a lot less because of just on scale. But I was able to tell you Target's 3.2 and Walmart's 2.8. You'd say, oh, well, Target's doing better. Or Apple's 25%, 25 cents for every dollar sold. Or Microsoft is 35 cents for every dollar sold. Those are numbers that are practical, that would be a little bit easier to compare for every on a 100% basis than to go to the absolute numbers, which could be confusing as heck. If I told you they had $680 billion, $985 million in sales, you'd say 2/3 of $1 trillion. That's a lot of sales, but it's kind of hard to get a perspective when you're comparing it with other companies, other organizations. So this will give you an idea of how we do that. I'm going to do the same thing. Now, you'll notice here, I'm going to insert a row here because I need to calculate gross profit. I'm going to do that by taking my equal sign, my total revenue, minus my cost of goods sold. That's why I like using spreadsheets, because it can do all this stuff for me. I'm going to copy this formula over to these two cells. So now I've got a cost of goods sold, gross profit for all 3 years. You can see why Excel is that powerful. Then we're going to do the same kind of calculation. We're going to do equal our gross profit would be, let's do a cost of sales divided by sales revenues first, slash, go over to here, calculate. And you notice we got 75.15%. That means for every dollar worth of stuff they sell, roughly 75 cents on average is the cost of the actual goods itself. I'm going to do one more calculation here just to see if it gets us a little closer to understanding this. So I'm actually going to take my gross profit and divide it by that same total revenue. I hit return. Now you notice if you add these two numbers up, you get 100%, which is totally logical because I take my revenues minus my cost of sales and I get a gross profit. So I take bottom line, 75 cents is what the cost of the orange or the candy or whatever I'm buying for $1 from Walmart is. And 25 cents is what they profit just based on the material stuff. But to get down to the bottom line, the 2.85%, the 1.91, we deduct all this other stuff to get to their bottom line net income. So that should give you an intro and oversight and understanding the basics of what it takes to succeed in getting into Edgar, to doing some financial analysis, and understanding what it takes to compare numbers between different kinds of companies. You'll also be using Edgar for other financial analysis, and I'll probably have some exercises assigned that you're going to want to be able to use Edgar. You could always go to the website of the company itself, but you're much, much better off going to the annual report through Edgar because now you can access all the annual reports U.S. traded. Just an aside, I mentioned Toyota earlier. You could get Toyota's annual report from the Toyota website. It would be in yen, not dollars, but that's okay. A percentage is a percentage. So you can look at their bottom line. They might have a 3% net income percentage based on total net income over total sales of Toyota. Whether it's yen, dollars, euros, it's not going to really matter and for percentage purposes. So good luck. Hope you found this helpful. We'll look forward to sharing more insights as we go. Thank you for your time.